What's up, YouTube? Welcome back to another video. Portfolio's down $1,254. And honestly, I am getting tired of opening these videos with saying that the portfolio is down. As you guys know, I have Amazon, Meta, Google, and Microsoft as my biggest positions. Today, I wanted to cover a couple of my new pickups like ServiceNow. In Robinhood, for example, the South Korea market opened overnight because, of course, they're across the world, and they actually sold off heavy into the day when it comes to AI semiconductor stocks, and they actually hit circuit breakers, which is kind of insane. Actually, think about. I think the only time that I remember seeing circuit breakers was during COVID-19 in 2020. But today I want to talk about some of my new positions like Robinhood, ServiceNow, where I think these companies are going to go. I also added $11,000 to the portfolio. That's why we're actually up to 161. But if you look at the month, we're actually down probably a good bit of money here. I want to guess like 22K. Yeah, so a good bit of cash that we're down. We had somewhat of a recovery here on June 15th, but didn't really hold. We had all-time highs of 189, which is awesome. Portfolio is getting to 200K. I'll keep adding money to this thing, throughout the year, and then manage this money all throughout next year as well, and get to the $1 million mark that we've been talking about. But if you look at year to date, we're actually pretty flat or down 1%, which is not ideal. And that move is mainly because Ethereum and Bitcoin have been selling off. And that represents around $5,000 worth of losses this year, which is not ideal. That's driving the portfolio down a good bit. Google has actually been selling off a ton as well. They had one of their AI researchers go to Anthropic and the stock just cratered. And I think that's bizarre that the market thinks that this company's done because one of their AI researchers is just leaving. So the company's done. This is bizarre. I mean, whenever I think of Google, they're the ones with the most distribution when it comes to their AI models and AI infrastructure. Because if you think about it, OpenAI, for example, has a phenomenal model with their ChatGPT, and they don't have the same distribution that Google does. So whenever you think about monetization on things, the ones that have the most and the best distribution, like Google, for example, end up winning. Like if you guys see on social media, for example, you could have a major account where you're selling X, Y, and Z product, but you have 100 people following you. But let's say you're really good at social media or you're good at advertising and you get 1 million people to follow you or 1 million people to see your content, you're most likely going to sell more of that item, even if it's an inferior quality or an inferior need, just because you have more of a distribution. And that's the same case with Google here, in my opinion. One of the biggest companies in the world, their distribution is massive. They have so many people using Google Workspace and Google products in general. So I think this is an exaggerated reaction. Microsoft, I bought another 3 shares earlier today. So I bought $1,200 worth of the stock. That represents around 3.3 shares at 372. So this thing has actually sold off a good bit as well. We rejected some of those support levels that were kind of key, and we're actually selling off a good bit. So we had a previous low of 356. And, we're in a downward trend right here. I don't know if we're going to go to 356 again in the 350s. I think at these prices, this thing is just an obvious buy. Like we had somewhat of a recovery to 460. And I can certainly see Microsoft and ServiceNow having somewhat of a rally back to these levels that they were trading at. Not necessarily all-time highs yet, but I can see a major bounce from these lows. And honestly, I'm not trying to predict where the low is going to be, but I think we're getting close to it. And check back in a couple of weeks. But Microsoft at 367, I honestly do not see this thing going under 356 by any stretch of the imagination, unless we have a major significant pullback with a lot of different news that are bearish for the market. But for now, we bought a little bit more Microsoft, and I honestly kind of spent all of my $11,000. Actually, I sold out of MU in my leveraged MU shares, so I have $6,000 here for us to buy. But honestly, I'm waiting until PCE comes out this week, and we have Micron earnings as well. So probably won't do any more buys this week. I usually like to buy whenever there's a lot of pain. And we have a lot of pain with Microsoft and Meta, but I'm already pretty overweight these two, honestly. When it comes to Meta and Microsoft, they account for probably 40% of the portfolio, if not more. We have around 90 deltas of exposure. So if you want to calculate how much exposure you have on your leaps, just calculate your delta times the stock price. So if you were to calculate 9 times 560, That's a lot of money. Around 50 grand worth of exposure for Meta. And that's mainly why the portfolio has been bleeding, because this thing has been selling off a lot. If you look at the year chart, again, this has a similar price action to Microsoft. When we had our 52-week lows on March 27th, Microsoft kind of behaved the same way. And today is June 23rd, and we're trading at 563, approaching those 52-week lows that we saw during that sell-off back in March. So this is interesting price action here for Meta. Hopefully it doesn't stand and we go back to some of these prices right here, 738, that we saw in January, and have more of a recovery rally here. It honestly only takes a couple of quarters. It only takes a couple of months of good news for these stocks to come back up. But let's talk a little bit more about my new pickups and why I think ServiceNow is a phenomenal company right now. And the software sector is, again, being sold off all of these fears of AI, but I think ServiceNow is different. So let's get into it. So this is ServiceNow here trading at $96. And ServiceNow is an enterprise software company, and they help with workflows. And now they're implementing AI workflows within companies. So if you think of ServiceNow, they're connecting multiple different departments through one platform. So whenever you're in a software company, you have a ton of employees, you have HR, you have people doing ticket handling, you have all these different departments within a company, and ServiceNow is a way for them to talk to each other. But now they've just gone into AI workflows and implementing AI to these companies through their platform and making them more effective. So this is what they do on a nutshell. Honestly, you guys could do a deeper dive into it. Just ask Claude what they do. I interact with ServiceNow actually at a frequent basis, just working at a software company myself. And they actually work with more than 90% of Fortune 500 companies, which is insane. Think about they have all this market share. Their revenue's up 22% year over year. And let's look at their earnings per share here at the bottom and a little bit of their financials. Like you guys can see, like even the analysts, which I don't hold much weight into this, but they have a 90% buy rating. I really think the market has overreacted when it comes to software stocks and such quality names like Salesforce and ServiceNow, for example, that they're trading at their 52-week lows and they're getting at very interesting prices. So if you look at their earnings per share, they beat earnings almost every time. As you can see, they make a ton of cash and it's up and to the right, which is what we like to see. But I still think they're deeply undervalued. When you think of ServiceNow, they have multiple customers that spend more than $1 million with them. And that number of customers that spend $1 million with them grew 130%. So the customers they have, they're expanding into ServiceNow and getting upsold a bunch of other products within the company. So they're growing customer base. They're spending more than $1 million with them. I think it's very bullish. When you think of a software company that has so much market presence like ServiceNow, for example, like if they already sell to 90% of Fortune 500, who else are they going to sell to? So it's cool to see that they're expanding within their customer base already, and their customers are being happy and staying with them and spending more than $1 million for ServiceNow. And they've seen a lot of growth in that segment, which I think is really cool. And I'll show you guys some of my buys here. I've been buying on this way down, and I actually posted a video or YouTube shorts that I had 4 shares of ServiceNow, and I think people don't really understand my buying methodology, and I'm sure people do this as well. And I like to start buying into a stock whenever I see pain, but not necessarily peak pain. I start buying, let's say like 80-70% through the pain, and I never catch the bottom. I think it's very difficult for you to do. But if you look at ServiceNow, for example, I started buying at 135. So this is when I first started seeing this stock, and I saw it went from 80 to 135 a couple of months ago, actually May 29th. So I'm like, okay, this was interesting. If we actually have a reversal, which we did, I think this thing is going to be a very interesting name to pick up. So I saw 104 as a good level to entry. So I bought $400 here, bought $1,000 the next day, or a couple of days later, 104 again, and then 102. And then we started seeing more pain, and then trading into the 90s, I started buying a little bit more. And now I have around 70 something shares of ServiceNow. And I'll probably buy more, honestly. If it keeps trading down, we actually had a phenomenal day here at 3% on some good news that they're partnering with this other company. But let's look at price actions specifically here. This looks very similar to what Microsoft did, and not necessarily previously, because Microsoft has been trading down for a minute. But if you look right here, April 10th, we saw a 52-week low pretty much at $83. And then those prices repeated again at 84 and then 87. Saw a $93 low as of a couple of days ago. But then we saw this somewhat of a rally to 135, which is really cool to see. And I actually thought we are going to see more of a rally here, but software has gotten hit again. Software just cannot catch a break. But if you look at their all-time highs of 225, we're actually trading significantly below those levels. They're down 50% on the year. Like, this company makes $5 billion of free cash flow every year, and people are selling off because they think they're going to get disrupted by AI. But honestly, I think it's such a fallacy because they're actually enabling businesses to use AI. Same thing with Salesforce. They're getting crushed. Salesforce has never traded at these levels in multiple years. They're such a consolidated company. They sell into so many of the Fortune 500 companies already. They make so much cash. I think it's a phenomenal company. I just picked ServiceNow because they have a smaller market cap and they're more of an AI centric company. And I think they're going to be able to implement AI workflows, and I think they're going to be able to help the Fortune 500 a lot better than Salesforce is. I'm not saying Salesforce is a weak moat. I think their product's fantastic, and the company financials are also great, and leadership's great. Mark Benioff is phenomenal, but I just think ServiceNow has more growth to have than Salesforce, for example, because Salesforce has been around for a minute. ServiceNow is more of a new company, and yes, they work with a lot of the Fortune 500 already. But if you look at the stat where they're expanding to 130% more of their customers making $1 million plus or spending $1 million plus with them, I think is very bullish. So this is my new pickup and why I'm investing into them. I'm currently down 1%, which is not good, but just a little bit. And yeah, I have around $7,200 or 75 shares of this company, and this represents 5%. I might make this a 10-15% position depending on how much cash I get into this portfolio and how I depend to allocate it. But that's the plan for now. I'm a fan of ServiceNow, and just a little bit more of diversification. So if you think of my Amazon, Google, Meta, and Microsoft positions, those account for a lot of the portfolio. When we think of those four companies, like I mentioned, these are the foundations of the portfolio. So we have Google here as a massive position of 46K, Microsoft, which is honestly all of cash, no gains at 38K, which is extremely good because this is mostly gains. I have around 25K in gains, and I'm trying to replicate this with Microsoft now, and I think we're going to get there. And then Amazon, I have 2.7K right here and another $10,000 of mostly intrinsic value here on these leaps. So that's another, $13,000 there with Amazon. That's my fourth largest position as of now. In Meta, which actually have been bleeding a good bit, but this represents $26,000 in my contract right here, which is not necessarily all intrinsic value. We have a couple $1,000s there of extrinsic value that are going to decay over time. But, as my contract gets further in the money, the more intrinsic value I'm going to have. So this contract trades at around 90 deltas right now. And as time goes on and Meta goes up, this contract is going to trade at a 95, 97, even 98 delta. So that's my goal here. This is, we're down $5,000, but since I have a little bit of leverage with this thing, I have around $50,000 worth of exposure. So technically, Meta is my biggest position when it comes to price action because I control 90 shares worth of exposure through this contract. So like I mentioned, those are my four pillar growth positions here for the portfolio. And yes, I'm very exposed to AI, CapEx, and the hyperscalers. All four of these companies spend a ton of cash into AI. To be a 10 to 15K position, I think would be really cool. And I've been watching SoFi and CoreWeave as well. I'm bullish on them. I just don't know when to allocate to those two yet, and I got to do some more research on them. But a little bit of exposure with Marvell, around $3,000. And I had another like $7,000 into Micron. I actually took a little bit of a lost a couple $100, and not happy with that. I should have sold yesterday, which was the plan. But I got greedy and I thought they were going to trade up amid earnings. And honestly, I think they're going to trade down on earnings, and I think they're going to beat and have great guidance, but they're going to trade down on it, just like NVIDIA did. And we'll see what happens tomorrow. But this is how the portfolio is looking in building up these satellite positions like ServiceNow and Robinhood, which I'm super happy with. Maybe I'll dump the $6,000 we have when we see a red day. And I'm waiting for the PC reports to come through to have a better idea on what's going on with inflation and the market to react according to that. And this right here is just kind of a gamble, honestly. All six of these, like Rigetti, IonQ, QBTS, ASDS, Rocket Lab, and SpaceX, are all just, fun $2,500, $3,000-ish worth of money that, if it goes down 50%, like, yeah, $1,500 loss sucks. But, the upside on these, I think it's much greater than if I were to just eat a 20, 30% loss. And I don't really think about these. It's kind of annoying to have them drop, and losing like $100 on Rocket Lab or ASTS, for example. But that's just the name of the game. Like if you're investing to speculative things like this, you're going to have periods where they're going to sell off. So that's why the portfolio is allocated this way. It only represents like a point and a half, maybe 2 points, 2% of the portfolio. And I try not to think about it, but I do think about it sometimes. But it's just here at the bottom. So this is how the portfolio is allocated. Hopefully you guys enjoyed the video, kind of all over the place. I just want to do a portfolio update because I put $11,000 into this thing, and it'd be kind of confusing if I just keep going with these episodes without explaining the new money coming in and some of the new allocations. So hopefully you guys enjoyed. A lot of things to come. Tomorrow we have Micron reporting earnings after the bell on Wednesday. And then we also have the PCE. That's the Fed's favorite inflation report. I think it's actually going to come in at expectations at 3.6%, and we're not going to have a shock on the PCE. Like, yeah, we still have lingering energy prices with the Strait of Hormuz being closed for the last couple of months, but now it's the Strait of Hormuz being open following PCEs and CPI reports, excluding core PCE and core PCI. I think they're going to be more stable. And if things actually get more normal and the Strait of Hormuz is back into operations and energy is good and PCE is healthy and the CPI is healthy, I think we could see a Fed not raising rates in December. And that's the expectation that the market has right now. So we have a lot riding on the PCE. Hopefully you guys enjoyed the video. Let me know what you guys think in the comments. We're growing this account to $1 million. I appreciate you being here. Don't forget to leave a like and subscribe. I'll talk to you guys soon.